I thought we shared everything. Then I found a bank account in her maiden name I was never supposed to see. What I discovered next changed everything. I first noticed the envelope because it did not belong in our mailbox. It was thinner than most bank letters and printed on unfamiliar paper, the kind institutions use when they do not want attention. No logo on the outside, no sender address. Only my wife's full legal name typed in strict uppercase letters. Not the shortened version she normally used, not the married version she signed everywhere else. Her maiden name. That alone was wrong. For 8 years of marriage, I had never seen her receive financial correspondence under that name again. I placed the envelope on the kitchen counter and waited for her to come home. I did not open it. I had never opened her mail before. We had always operated on quiet transparency, shared passwords, shared accounts, shared plans, nothing hidden. That was the structure we built our life on. When she walked in that evening, she saw the envelope immediately. Her reaction happened before she could control it. She froze. Not confusion, not curiosity, recognition. Then she smiled too quickly and picked it up like it was something ordinary. "Just paperwork," she said. She did not open it in front of me. She placed it into her handbag. That was the first fracture. Later that night I asked her where the letter came from. She said insurance, but we already had insurance together. Everything together. Mortgage, utilities, taxes, retirement, emergency savings, joint investment portfolio. There was nothing left that required separate paperwork. I let it go that evening. Not because I believed her, because I wanted to see if the lie repeated itself. 3 days later, another envelope arrived. Same paper, same formatting, same maiden name. This time, she reached the mailbox before I did. She never used to check the mailbox first. Now she checked it every day, quietly, methodically, like she was waiting for something. That changed the atmosphere in the house more than the letters themselves. Small behavioral shifts reveal structure better than direct evidence. She began carrying her handbag everywhere inside the house. Bathroom, laundry room, garage, even when taking out trash. Before that week, she left it on the kitchen chair every evening without thinking. Now it stayed with her. Always closed, always near her. I started paying attention to timing. She began stepping outside to answer certain phone calls. Not all, only some. Always the same tone when she returned, neutral but slightly controlled, as if she had rehearsed what her face should look like. One night I asked directly, "Is something wrong financially?" She answered too fast. "No." Not "why?" Not "what do you mean?" Just "no." That response ends conversations instead of opening them. A week later, I saw the envelope again. Different sender code. Same formatting. Same maiden name. This time she forgot to take it upstairs immediately. She left it on the dining table while she answered a phone call in the hallway. I did not open it, but I turned it over. The return code was not insurance. It was a bank processing center. Not our bank. Not any bank we had ever used. A regional institution located 3 cities away. There was no reason for her to have an account there. None. That night I checked our shared finances carefully. Everything looked normal. Balances unchanged, transfers unchanged, payments unchanged, no withdrawals, no missing money, no unusual activity, which meant something else entirely. If there was another account, it was completely separate from our system, hidden before it ever intersected with our marriage finances. That requires planning, That requires intention. That requires time. The next morning she woke earlier than usual, earlier than she had ever woken on a weekday. She dressed quietly, took her handbag, and left without coffee, without breakfast, without telling me where she was going. She never left the house like that before, not once in 8 years. At 9:12 a.m., I received a notification from our joint credit card provider. Not a transaction, a verification alert. Someone had attempted to confirm identity details connected to her previous surname. Not through our account, through an external institution inquiry, which meant someone was linking her maiden identity to active banking verification requests. And they were doing it now, not years ago. Now, I did not confront her that morning. Confrontation without structure destroys information. Instead, I documented what I already knew. 3 envelopes, maiden name usage, external banking verification activity, early departure without explanation, behavioral shifts inside the house. None of that proved anything alone. Together, it formed direction. At 11:03 a.m., she texted me, "Busy morning, running errands." She never used that wording before. When she actually ran errands, she listed them. Groceries, pharmacy, post office, always specifics. Now there were none. At 12:47 p.m., another alert arrived, not from our bank, from the credit monitoring service we both subscribed to after buying the house. A soft inquiry had been logged. Same regional banking institution, same location code from the envelope, same maiden name. But the inquiry category was different. Account activity confirmation, not identity verification. That meant the account already existed. This was maintenance, not creation. Something active was being updated, which meant the account had not been opened recently. It had history, possibly years of history. That realization changed everything. Opening a hidden account during marriage is concealment. Maintaining one across years is architecture. She returned home at 2:30 p.m. Same controlled expression, same neutral tone, same handbag still closed. I asked where she went. Shopping. No bags, no receipts, no explanation. I nodded once and said nothing else. Silence forces people to decide whether to reinforce their version or abandon it. She reinforced it. Just small things. Still nothing specific. That evening she cooked dinner earlier than usual. Earlier routines often appear after stress exposure. People stabilize themselves through repetition. At 7:18 p.m., her phone vibrated on the kitchen counter while she was in the laundry room. She normally kept it with her now. This time she forgot. The screen lit up. Unknown number, no contact name, but the preview line appeared long enough to read. Transfer confirmed. Same structure as before. Not salary, not refund, not household payment language. Structure. That word belongs to systems, not purchases, not personal spending. I placed the phone exactly where it had been before the screen dimmed. When she returned, she checked it immediately. Too quickly, too directly, like she already knew something had arrived. Later that night, she took a shower earlier than usual. Her handbag remained in the bedroom, closed, but not zipped. That was the first mistake she made. Inside the side pocket was a folded receipt. Thermal paper, bank service kiosk printout, regional branch location, same city listed on the envelope. Transaction category line visible through the fold, deposit confirmation, amount unreadable. Date, that morning, which meant the early departure had not been errands. It had been a bank visit. Not our bank. The other one. I returned the receipt exactly where it had been. Same fold direction, same position, same orientation. She never noticed it had moved. At midnight she was already asleep, her breathing steady, normal rhythm, no tension, no hesitation. Whatever the account was connected to, she believed it was secure. That confidence suggested something else. She did not expect discovery, which meant the account was not temporary. Temporary concealment produces anxiety. Long-term concealment produces routine. At 6:42 a.m. the next morning, before she woke, I checked something I had never checked before. Archived tax documentation. Every year of our marriage, joint filings, amendments, supporting attachments, everything matched, everything complete, except one detail. 3 years earlier, during a refinancing document submission, she had listed an additional financial institution under existing external accounts. The field had been optional. It had not triggered review, because the balance column was blank. At the time, I assumed it referred to a closed student account she once mentioned. Now I knew it had not been closed. It had been active, and she had reported it once, quietly, accurately, but without explanation, which meant she had never technically lied on paper. She had only avoided discussion. That is a different strategy, and it requires preparation long before discovery becomes possible. After I found the refinancing document entry, the timeline changed shape. The account was not new. It existed at least 3 years earlier, possibly longer, which meant the envelopes arriving now were not the beginning of something. They were a continuation of something already established. That distinction matters. Sudden secrecy signals reaction. Long secrecy signals infrastructure. I stopped looking at the present and started reconstructing the past. 3 years earlier was the same year she insisted we restructure our mortgage terms, even though interest rates were already stable. At the time, her explanation sounded reasonable. She said it was future-proofing. I agreed without resistance because she normally handled paperwork carefully. Now I reviewed that refinancing folder again. Her handwriting appeared in only one place. The optional disclosure section listing that external institution. No balance declared, no explanation attached, no follow-up questions from the lender. It passed unnoticed because technically nothing required clarification. That meant she had disclosed the account legally but concealed it personally. Those are two different behaviors with different intentions. At breakfast that morning she behaved normally. Too normally. Coffee measured the same way. Same routine questions about my schedule. Same tone, same timing. Nothing forced. No defensive language. People hiding something new become careful. People protecting something old stay consistent. She belonged to the second category. I asked one controlled question. Did you refinance anything separately back then? She looked at me for less than a second too long before answering. No. Why? Not confusion, not recall effort, immediate denial followed by inquiry. That pattern attempts to reverse direction of conversation. Just reviewing paperwork, I said. She nodded once and returned to her coffee without asking anything else. That was unusual. Normally she would ask what paperwork I meant. Now she did not. Later that afternoon, I checked our storage cabinet where we kept older archived documents, marriage certificate copies, insurance renewals, vehicle registrations, warranty envelopes, everything organized chronologically. She had always insisted on that system. But between the folders from 4 years ago and the folders from 2 years ago, there was a missing sleeve. The label marker remained. The plastic folder itself was gone. The label read, "Bank correspondence, temporary." Temporary correspondence does not disappear unless it becomes permanent somewhere else. That missing sleeve confirmed something else. She had removed physical traces at least once before, which meant she anticipated future review long before I actually reviewed anything. At 5:06 p.m. that evening, another envelope arrived. Same format, same printing style, same maiden name. This time she was not home yet. I placed it exactly where she would see it first when entering the kitchen. I wanted to watch the reaction without warning. When she stepped inside, she stopped mid-sentence while greeting me. Her eyes moved directly to the envelope before finishing the word she had started saying. She picked it up immediately and slid it into her handbag without opening it. No hesitation, no explanation offered, no attempt to disguise recognition. That speed confirmed habit. She had done this many times before. During dinner she spoke more than usual. Extra conversation, extra questions about my work schedule, extra interest in weekend plans. That pattern appears when someone wants to control conversational terrain. Control reduces unexpected directions. At 8:11 p.m., her phone vibrated again. Same unknown number pattern, same short notification preview before screen dimmed. Statement cycle closed. Same routing confirmed. Routing confirmed. That phrase belongs to repeated transfers, not single transactions, repeated movement of funds through stable channels. After she went upstairs, I opened our joint banking portal again and checked something more carefully than before. Not balances, not transactions, transfer limits, authorization roles, historical permissions. 3 years earlier, she had requested a temporary increase to her individual outbound transfer threshold. At the time, she explained it as preparation for contractor payments during our kitchen renovation. That explanation matched the timeline. I approved it. The limit increase never returned to its original value afterward. It remained elevated permanently, meaning she had preserved the ability to move larger amounts without triggering joint approval alerts. At 11:40 p.m., I reviewed archived email confirmations connected to that authorization change. The timestamp matched the same week as the refinancing disclosure entry. Same week, same documents, same adjustments. That was not coincidence. That was coordination. The next morning I checked one more detail I had ignored until then. Her employment payroll structure, not salary amount, routing instructions. For 8 years her salary had entered our joint account directly. Stable, predictable, documented. But beginning 19 months earlier, there was a change entry inside her employer payroll portal history. Primary routing unchanged. Secondary routing added. Percentage undisclosed. External institution code partially masked. Same regional bank identifier prefix as the envelopes. She had not redirected everything, only a portion, which meant the hidden account was not separate from her income. It was fed by it. Once I confirmed the payroll split, the account stopped being theoretical. It was active funding, not inheritance storage, not emergency reserve, not forgotten student balance. A controlled income diversion running for at least 19 months. Possibly longer if earlier deposits existed through other channels. I calculated the implications before checking the numbers. Even a small percentage redirected monthly over that period would accumulate into something deliberate, something planned, something that required intention to maintain without discussion. That morning I did not mention anything about finances. Instead, I asked a different question. Did payroll ever change routing during the renovation period? She paused just long enough to decide how precise her answer needed to be. No. Why would it? Not, I don't think so. Not, I don't remember. No. Definitive denial, which meant she already understood what I was asking before I explained it. That response confirmed she remembered the routing change clearly. People forget ordinary adjustments. They remember concealed ones. Later that afternoon, I accessed our shared tax preparation archive again, this time focusing not on filings, but supporting attachments. W-2 copies, employer summaries, benefit statements, contribution breakdowns. Everything matched the totals reported on our joint returns, which meant something precise. The diverted income portion still appeared in taxable totals. She had not hidden earnings from the government. She had only separated the destination. That distinction protects legality while preserving secrecy. It is a structured decision. At 3:22 p.m. I checked the mortgage payment history. Every payment correct, every transfer on time. No anomalies, which meant the hidden account was not supporting the household from the outside. It existed parallel to it. Parallel systems do not exist accidentally. They exist intentionally. That evening she returned home later than usual, not dramatically later. 47 minutes, enough to notice, not enough to justify explanation without prompting. She entered carrying groceries this time, visible ones, receipt placed openly on the counter, itemized normally. That behavior corrected the previous day's absence of evidence. Correction appears when someone senses observation. During dinner, she mentioned her employer reviewing internal account compliance updates. She volunteered that information without context, without my asking anything. Compliance updates, account routing, payroll adjustments. That sentence was not random conversation. It was positioning language, preparing an explanation before a question exists. After dinner, she stepped outside to take a phone call again. Longer than the others. 7 minutes. When she returned, she placed her handbag on the kitchen chair instead of taking it upstairs with her. That had not happened once since the envelopes began arriving. Behavior returned to earlier patterns. Confidence had shifted. Something resolved. At 9:05 p.m., another notification appeared on her phone screen while it rested on the counter beside the sink. This time, the preview text was longer. Monthly distribution adjusted, future schedule unchanged. Distribution, schedule. Those are not emergency savings words. Those are recurring structure words. After she went upstairs, I checked the shared cloud storage folder we used for document backups, insurance scans, mortgage statements, vehicle registrations, retirement projections. Everything remained where it should be, except a directory I had never opened before, named only with a year. Inside it were 3 PDF files, each titled using neutral numbering instead of description. File 01, File 02, File 03. The first contained a signature confirmation page from the same regional bank. Account opening authorization, dated 4 years earlier, before the refinancing disclosure entry, before the transfer limit increase, before the payroll split. which meant the account had existed longer than everything I had already confirmed. The second file showed a beneficiary designation update, executed 2 years earlier. Not my name, not our joint estate structure, a different individual entirely. The third file was a standing instruction authorization, automatic monthly transfers scheduled, destination masked, origin confirmed as that same hidden account. The schedule start date matched exactly 19 months earlier, the same month the payroll routing change appeared in her employer records, everything aligned: opening, disclosure, authorization adjustment, payroll split, standing transfer schedule. None of it random, all of it coordinated across years. The beneficiary document changed the structure of the situation completely. A hidden account can sometimes be explained as precaution, personal security, family obligation, legacy separation. But a beneficiary designation outside the marriage estate removes ambiguity. That decision defines intent clearly. It assigns ownership direction after death. It creates a parallel future. I did not recognize the name immediately. That mattered. If the person had been a sibling, parent, or known relative, recognition would have been immediate. Instead, I had to search. The surname matched hers. Maiden surname, which meant the connection existed before our marriage, but not inside the family circle I knew. That narrowed the possibilities: extended relative, old legal dependent, or someone she had deliberately never introduced into my life. The next step was not confrontation, it was confirmation. I checked the timestamp metadata inside the beneficiary PDF 2 years earlier. Same month she had insisted we update our joint retirement allocation percentages. At the time, she explained it as balancing risk exposure. Now the pattern repeated again. Whenever one shared structure changed, a hidden structure changed at the same time. Parallel maintenance, not accidental overlap. At breakfast the next morning, she behaved normally again. Measured routine, stable voice, no visible hesitation. People protecting long-term systems behave this way because the system already exists, independent of conversation. I asked another controlled question. Did we ever finalize beneficiary updates across everything after refinancing? She answered immediately. Yes. Technically correct, but incomplete. We finalized the visible ones, not the hidden one. That distinction mattered more than the answer itself. Later that afternoon, I reviewed archived insurance beneficiary designations from our policy provider portal. Everything listed correctly. Spousal priority, secondary distribution logic consistent. Nothing unusual, which meant the hidden account remained isolated from every shared protection structure we had built together. Isolation requires maintenance. Maintenance requires intention. At 2:14 p.m., I returned to the cloud folder and opened the beneficiary PDF again. This time I examined the address attached to the recipient name. Same regional city as the bank branch, same postal district. Not coincidence. Physical proximity suggests operational connection, not symbolic designation. At 3:02 p.m. I checked something else I had ignored until then. Travel history, not vacations, work trips, errands, visits she made alone. Over the last 4 years, there were 6 separate mornings she left early without explanation beyond appointments. Each date aligned with either document creation timestamps or statement cycle confirmation messages visible in the envelopes. 6 visits, 4 years, regular spacing, Maintenance pattern, not emergency response, not crisis behavior, routine service visits. That meant she did not manage the account exclusively online. She maintained it physically, which increases effort, which increases intention. That evening another envelope arrived. Same format, same printing style, same maiden name. This time I opened it. Not immediately, not impulsively, carefully. Inside was a quarterly summary notice, no balance listed. Only confirmation that scheduled transfers continued without interruption, and one additional line printed at the bottom. Custodial oversight status unchanged. Custodial, not personal, not independent. Custodial structure indicates management responsibility for another individual, not herself, not a partner, someone dependent, someone legally connected through responsibility rather than ownership. At 7:48 p.m., she returned home and saw the envelope already opened on the kitchen counter. She stopped walking. Not surprise, recognition, then calculation. Her eyes moved from the envelope to me, then back again. She did not ask why I opened it. She asked something else instead. "How much did you read?" Her question confirmed everything the envelope implied. People protecting privacy ask why something was opened. People protecting structure ask how much was exposed. She already knew what mattered inside the letter. She needed to measure what I understood. "Enough," I said. Not a number, not a boundary, just confirmation. She placed her handbag on the chair slowly and sat down across from me at the kitchen table. No denial, no explanation yet. Silence first. Silence is where people decide whether they can still contain something or whether containment has already failed. "That account isn't what you think," she said. That sentence appears when someone knows the observer already understands more than expected. "I know it's custodial," I answered. Her expression changed immediately. Recognition replaced calculation. Now she knew concealment had ended. She did not speak for several seconds. Then she said a name, the same name listed in the beneficiary document. I recognized it now because she pronounced it differently than I had read it. It was not a relative I had never met. It was someone she had mentioned once, years earlier, in passing conversation about her life before we met. A child. Not hers officially, but hers in responsibility, from before our marriage. A younger brother's daughter, her niece. At the time, she told me the girl lived with other relatives after a complicated family situation. The conversation lasted less than 2 minutes. It never returned again. I never asked more because she presented it as resolved history. It had never been resolved. "The account pays for her," she said. Not helped, not sometimes. Pays, present tense, continuous obligation. I did not respond immediately. People revealing long-held systems continue speaking if interruption does not arrive. "She needed stability," she continued. "School, housing, medical coverage. Everything changed too fast back then." 4 years? I asked. "Longer," she said. "Longer meant before our marriage, before our house, before our joint accounts, before everything we built together financially. That explained the opening date, but not the concealment after that point." "You could have told me," I said. "I almost did," she answered. Almost is not disclosure. Almost is preparation without execution. "I thought I could manage it without affecting us," she continued. "Then it became routine. Then it became structure. And after that it became harder to explain why I hadn't said anything earlier." Structure again. The same word from the phone notification message. Now it had context. "How much?" I asked. She understood what the question meant. "Not enough to change anything here," she said. That sentence was careful. It described impact, not amount. "How much?" I repeated. She gave the number. It matched what I had estimated from the payroll routing percentage range. Consistent, predictable, not emergency-level spending, not hidden wealth movement, support allocation, monthly, scheduled, documented, legal, but undisclosed. "For her guardians," she added, "and directly into her education account." Guardians, plural, which meant oversight existed beyond her alone, which meant documentation existed outside the hidden account as well. "Why the beneficiary designation?" I asked. "In case something happens to me," she said. "It keeps running without interruption." That explanation aligned with custodial language inside the quarterly statement notice. Continuity planning, not secrecy planning. Those are different systems. "But why separate from everything else?" I asked. This time she did not answer immediately, because this question addressed the real issue, not the account, the silence around it. "I didn't want her support depending on our marriage," she said finally, "not depending on trust, not depending on agreement, depending on marriage." That distinction explained every structural decision she had made across 4 years. Her sentence changed the center of the situation. "I didn't want her support depending on our marriage." That was not secrecy for convenience. That was independence by design. It meant she had separated obligation from partnership deliberately, years earlier, before any conflict existed between us, before any reason to distrust stability inside the house. She had built a second financial channel, not because something had gone wrong between us, but because she believed something could go wrong someday. That difference matters. It meant the account was not reactive. It was preventative. I asked one question carefully. "Did you think I would stop you?" "No," she said immediately. Not hesitation, not uncertainty. "No," which meant the concealment was never about permission. It was about control. "I thought it needed to exist without discussion," she continued. "Discussion makes things negotiable. This couldn't be negotiable." That clarified the architecture completely. Negotiation changes structures. She built one that could not be changed. At 8:32 p.m., she stood up and went upstairs without taking her handbag with her again. That was the second time she left it behind voluntarily since discovery began. Behavioral tension had dropped. The system was no longer hidden, which meant she no longer needed to defend it. I stayed at the table and reviewed the timeline again. Account opening 4 years earlier. Refinancing disclosure entry 3 years earlier. Transfer limit adjustment same week. Beneficiary designation 2 years earlier. Payroll split 19 months earlier. Standing transfers activated same month. Maintenance visits 6 confirmed. Custodial status active. None of those actions were impulsive. Each required documentation. Each required signatures. Each required planning across institutions. This was not a private decision made once. This was a maintained obligation. When she returned downstairs, she placed something on the table between us. Another document, printed recently. Custodial authorization extension, her signature already on it, but not finalized. There was a second signature line still blank. Mine. "I was going to tell you this year," she said. "Not today, not now. This year." The extension transferred oversight continuity from a single-party custodial structure into a dual-party fallback structure in case she became unable to manage the account, meaning she had already planned a moment when disclosure would become necessary, just not earlier. "Why now?" I asked. "Because she turns 16 next month," she said. 16 changes legal classification in custodial finance structures in most jurisdictions. It shifts reporting thresholds, oversight responsibilities, transition planning toward independence. That timing matched the extension document precisely. "So the account changes structure," I said. "Yes. And I become part of it." "Yes." That meant she never intended permanent secrecy. She intended delayed integration. But delay still produces consequences. "Why not earlier?" I asked. This time she answered differently than before. "Because earlier it would have sounded like I was asking permission." There it was again. Permission, control, stability outside negotiation. Those were the real components of the hidden system. Not money, not trust, structure. She opened her handbag and removed the quarterly statement envelope I had read earlier, then another and another, 3 total, stacked, chronological, maintenance confirmations, transfer summaries, oversight continuity notices, everything aligned with what I had already reconstructed independently. Nothing contradicted it. No missing transactions, no unknown recipients, no unexplained routing, only one consistent destination pattern across 4 years: support, education, housing, medical coverage, guardianship assistance, predictable structure, documented structure, legal structure. "You were never supposed to find it like this," she said. Not denial, not apology, description, meaning she expected discovery eventually. Just not through reconstruction, not through pattern tracking, not through the envelopes. She expected to tell me herself. Later, on her timeline. Not mine. Once the structure was visible, the envelopes stopped being evidence. They became documentation. What mattered now was not whether the account existed, but why it had remained outside the marriage framework for 4 years, while everything else between us had been shared openly. The custodial explanation clarified purpose. It did not resolve the decision process behind concealment. "I need to see the full account history," I said. "Not balances first. History. Sequence reveals intent better than totals." She did not refuse. That mattered immediately. Refusal would have meant the system still contained protected layers. Instead, she unlocked her laptop, opened the regional bank portal, and rotated the screen toward me without commentary. No hesitation, no delay, no attempt to select specific pages before showing them. The account opening date matched the signature authorization I had already seen. 4 years earlier, 3 months before our wedding, which meant the structure existed before our legal financial integration began. That timing changed interpretation again. It was not created during marriage. It entered marriage already active. The first year showed irregular deposits, manual transfers, different amounts, different intervals, emergency-style support, not scheduled structure yet. The second year showed stabilization, monthly pattern beginning, education expenses appearing, medical reimbursement confirmations, housing support entries routed through guardians. The third year showed the standing transfer authorization appear, automatic distribution, predictable schedule, no interruption across 12 consecutive cycles. The fourth year showed payroll-linked routing reinforcement, Regular funding without manual action required. Maintenance rather than reaction. Each stage aligned with the timeline I had reconstructed from documents. Nothing contradicted the structure she described. "Why didn't you close it when things stabilized?" I asked. She understood the question immediately. Because stabilization removes emergency justification. "It didn't stabilize," she said. "It normalized." Normalization converts temporary responsibility into permanent obligation. The transaction descriptions confirmed that shift. School payments replaced medical reimbursements as primary outgoing entries. Housing support became partial instead of full. Education savings contributions increased gradually. This was not crisis support anymore. It was transition planning toward independence. I scrolled further. One entry appeared different from the rest. Not larger, not smaller. Different category. Legal services payment. Time-stamped 14 months earlier. "What was this?" I asked. "Guardianship review," she said. Review meant status change evaluation, legal oversight confirmation, custodial continuation approval, which meant the responsibility had been examined formally and preserved deliberately, not assumed, not informal, confirmed. That reinforced something else. She was not acting privately outside institutional awareness. She was acting inside recognized custodial responsibility structures, which meant documentation existed beyond the account itself. Court filings somewhere, guardianship acknowledgments somewhere, official continuity records somewhere. "You're listed as primary support?" I asked. "Yes." "Not secondary?" "No." Primary means obligation, not assistance, not optional involvement, responsibility. That explained the beneficiary designation. Continuity planning ensures obligation survives interruption. Marriage interruption included, death interruption included, incapacity interruption included. The structure protected against all three. I opened the earliest document inside the portal archive, initial custodial declaration, filed the same week the account opened, signed before our engagement was public, before any joint financial planning began, before any shared accounts existed, before any legal merging of assets started, which meant she never separated the obligation from her life trajectory. She carried it forward intentionally into everything that followed, not temporarily, not conditionally, permanently. By the time I reached the earliest custodial declaration in the archive, the account stopped looking hidden. It started looking protected. Protection and concealment produce the same surface behavior, but come from different intentions. One avoids exposure, the other preserves continuity. The document showed continuity. Still, something remained unresolved. She opened the account before our marriage. She maintained it during our marriage. She structured transfers around our shared finances. She prepared a beneficiary chain outside our estate plan. But she never told me. That part still required explanation. "When did she start depending on you completely?" I asked. "After her father disappeared," she said. Not left, not moved, disappeared. The wording mattered. "How old was she?" I asked. 12. That matched the account opening date exactly, which meant the account was not precaution, it was response. "And her mother?" I asked. "Unable to manage anything," she said. Not unwilling, unable. Legal guardianship structures usually begin at that point. "You became primary support immediately?" I asked. "Yes." No hesitation, no qualification, immediate assumption of responsibility. That explained the irregular deposits during the first year. Emergency stabilization period, housing, medical coverage, school continuity, transport costs. Everything a guardian structure normally absorbs gradually. She absorbed it instantly. "Why didn't you tell me before we married?" I asked. She answered without looking away, "Because it wasn't temporary." Not uncertainty, not embarrassment, certainty. She had already decided the responsibility would remain permanent before our marriage began. "I thought if I told you then," she continued, "it would sound like something you had to agree to before choosing me." Agreement changes decisions. Disclosure before commitment creates evaluation. She prevented evaluation, which meant she had already chosen her obligation before choosing marriage, not instead of marriage, before it. "When were you planning to tell me?" I asked. "When she turned 16, she said again. Same answer as earlier. Same timing. That consistency mattered. 16 is when custodial structures begin transition reporting. Education pathways formalize, guardianship oversight reduces, future independence planning begins. That was the point. She intended integration, not secrecy forever. Delayed disclosure until structural transition. "I signed the extension this week," she said, meaning the document she placed on the table earlier, the one with the second signature line. Mine. That line was not symbolic. It transferred continuity authority. If something happened to her, responsibility moved to me, automatically, without court delay, without interruption to the transfer schedule, without renegotiation with guardians, without institutional review, direct continuation. "You were always supposed to be here eventually," she said. "Eventually. Not immediately, not optionally. Eventually." That word explained the entire architecture, not exclusion, sequencing. She opened the drawer beside the kitchen counter and removed another envelope I had never seen before, not from the regional bank, from a legal office. Inside was a letter dated 2 weeks earlier. Guardianship transition notice. Age threshold review scheduled next month. Custodial support continuation recommended. Secondary support authorization requested. Secondary support. That meant me, already listed, already prepared, already documented, before I even knew the account existed. She had never planned to keep the structure separate permanently. She had planned to move me into it at the exact moment the system required expansion, not earlier, not later, exactly then. The letter from the legal office explained something the bank documents alone never could. I had not been excluded. I had been scheduled. Her decision had never been whether I would be part of the structure. It had been when the structure could survive disclosure without risk to the person it protected. That distinction separated secrecy from sequencing. I read the guardianship transition notice twice. Secondary support authorization requested, already prepared, already filed, already waiting only for my confirmation. "You listed me before telling me," I said. "Yes," she answered. No hesitation, because legally she needed a continuity path before the transition review meeting. Institutions do not wait for personal conversations to finish. They require documentation first. "You assumed I would sign," I said. "I knew you would," she answered. Not confidence in compliance, confidence in alignment. That difference mattered. I looked again at the timeline I had reconstructed across the last week. Account opened 4 years earlier. Emergency deposits first year. Structured transfers second year. Standing distribution schedule third year. Payroll routing reinforcement 19 months earlier. beneficiary continuity designation 2 years earlier, guardianship review 14 months earlier, transition authorization prepared 2 weeks earlier, extension signature line waiting now. Nothing in that sequence suggested concealment for advantage. Everything suggested continuity planning across stages of responsibility. "You should have told me earlier," I said. "Yes," she answered again. This time the word carried weight, not defense, acknowledgement. "I didn't know how to introduce something that wasn't temporary," she continued. "Temporary problems are easy to explain. Permanent responsibilities change how people hear things." Permanent responsibilities do not sound like information. They sound like decisions already made. That is why she delayed, not to hide the account, to avoid forcing agreement before the structure required it. I signed the extension document at the kitchen table, not because the account existed, not because the guardianship letter requested it, because the timeline proved something else. She had never built the structure against the marriage. She had built it ahead of the marriage, then carried it through the marriage without interrupting either one. After I signed, she placed the document back inside the envelope from the legal office and sealed it again carefully. Same habit as the bank letters, same precision, same routine, no urgency, no relief, just completion. The next envelope from the regional bank arrived 3 days later. Same formatting, same paper, same maiden name. This time she handed it to me before opening it herself. Inside was a confirmation notice. Custodial oversight structure updated. Secondary authorization active. Transfer schedule unchanged. Continuity secured. Her name remained first. Mine appeared directly beneath it. For the first time since the envelopes began arriving, nothing about the letter was hidden anymore.